I want to get your take on what Jim Cramer had to say, that the bond market is creating a lot of competition for the equity market right now.
Yeah, and I do think it is a real issue that you cannot ignore, particularly when you still have segments of the stock market, vast segments of the stock market, whose price-to-earnings ratio haven't exactly priced in the fact that expectations for Fed rate cuts have gone from 6 to 4 to 2. That's a big difference, and so that suggests that dividend yields are going to continue to have some serious competition. And so looking across the stock market, there are definitely some stocks that are vulnerable.
So you say there are some stocks that are vulnerable. You mentioned the cuts going from 6 to 4 to 2. Know what else seems to be reducing? The Magnificent 7, maybe down to 6, despite Tesla's recent earnings pop. In your mind, you believe the Magnificent 7 can survive this short-term choppiness. But if you look back to April 16th, it feels like it was forever ago. But if you look back to April 16th, when Jay Powell said that rates are going to stay high as long as they need to be, the Magnificent 7's actually underperformed the market by quite a bit. If these stocks are supposedly not as sensitive to interest rates, why are they declining even more than the general market during this time?
No, I actually think that they are sensitive to interest rates. These are some of the highest valued stocks in the stock market generally. However, you also get some of the best growth. So the big challenge is where you have high valuation and not necessarily a great growth profile. So you look at Apple, for example. Apple used to trade at somewhere around 10 times earnings, now trading at 24 times earnings. It's really hard to get excited about Apple at this valuation at this moment in time, because if you compare it, for example, to NVIDIA, that is trading at roughly the same price to earnings for much, much better growth, why would you take Apple? So now the competition within the Mag 7 is going to get really fierce. You already see Tesla almost dropping out. I feel like it's the Mag 6 now. But, you see Tesla really, really struggling to sort of maintain its mantle because now you have margins meeting lower-priced competition and an abandonment, effectively, of the low-priced Tesla. So that really creates a challenge for a really high PE stock.
You know what else is struggling? All of us with the idea of what the Fed's going to do next. So we have two, what I think are going to be important reports. We have GDP coming up later today, expected to show a slowdown quarter over quarter. Then we have PCE coming up tomorrow, expected to show a slight decrease if you look at core PCE. In your mind, are these market movers, even though I just mentioned what Jay Powell said back on April 16th, are these two reports possible market movers like previous ones have? Like, how are you viewing these two things?
Jay Powell has pretty much preempted what is coming, and he's effectively set the stage for higher for longer. And the Fed funds futures have adjusted. What has not yet adjusted is the broad multiple across the stock market. And that is why you're seeing, quite a bit of blood in the streets at the moment.